So thank you for being here today. Here to tell you a bit about FairFX. What I've just listened to the previous presentation, it struck me actually, although radically different businesses, there's some common themes there in terms of what we're trying to do and what LoopUp are doing, the types of consumers that we're going after, the type of section of the market rather than the early adopters. Some of you may have some questions about some of our competition. We'll come on to that in a bit. What are we? Well, actually, what we're not just FX. The business started a decade ago. The theory was banks were charging a lot for foreign exchange for the consumer, especially the retail consumers. We all know what it's like to go through an airport and getting ripped off there. If you look at the market, it's enormous. Travel money in the UK alone is about £40 billion a year. If you think of spreads at airports of 20%, it's a crazy amount of money that's being wasted by people. So big market, bad practices, and at that time, no technology being applied at all. So we were all queuing at bureau de change in airports or going to the post office. Smarter people went to the post office. So we applied some technology to it, created an FX business, initially concentrating on retail, foreign exchange, then expanding into business as well. We had a delivery mechanism of a prepaid card, which we'll cover in a little bit. We added a corporate platform to that, then international payments, and more recently we've added the ability to basically provide bank accounts in all but name. So we'll run through what we can now do. 750,000 plus retail customers, and it's not a trivial number of people to have using our services. And remember, the big bad enemy is still the banks, and the market's so big we don't need much of it to start making some decent money. Strong focus on profitability. We IPO'd in 2014 in August, so almost 4 years. At that time, we were loss-making. The theory of the IPO was to raise some money to spend on marketing, to gain customers then. The theory was that it would never be as easy to get a customer as it was then, and once they signed up, then they'd be sticky. That's proven to be true. I wish we'd raised more money at the time. Hindsight's marvellous, but there's a lot more competition in that particular space now. But we are profitable, and we have some healthy numbers in the pipeline for this year and then beyond. The business is strong. It's well capitalized. We have more than enough money sitting on the balance sheet to do what we need to do. And actually in financial services, having excess cash, you typically have to collateralize someone somewhere at some time. So having that flexibility to do stuff quicker is important. And last but by no means least, Trustpilot. There is this, it's a bit of a nightmare actually, Trustpilot, because if you get 9 5-star ratings and 1 1-star, it brings it all back down again. So it's a really, really hard exercise to keep that top-rated score. You have to be on it. And it's a good way actually of finding out what's good or bad about your product by keeping a tight handle on it, but we're very proud of the score. So I won't go through everyone's CV, but in payments or financial services in general, it's very important to have deep knowledge. You can't know what is possible, what's impossible, who does what, how it fits together, unless you've been there, seen it, done it. So we've, when we IPO'd, I think Paul will attest to this, it was pretty much me, and then was a big gap to the rest of the management beneath me. We've filled out the bench strength now in terms of the executive team that sits around me. So we've addressed that issue. So we know what we're doing, I think is the summary there. Just a quick timeline bubble thing here. So you can see we started in 2007. The actual first product was cash in the post, which we still do. It's not a great way of making lots of money, but it's a good way of acquiring customers that we then sell into the prepaid cards that we've highlighted up there. Fair Pay is the ability to wire money internationally, again, all through your phone. Corporate version of the same thing, added a bit later. We put EasyJet in the middle there. For those of you who fly EasyJet, probably all of you at some point, probably none of you are aware they do a prepaid card. They do. We do it for them. It's up to them to market it. They haven't really. But in terms of a badge of credibility of our technology, EasyJet are a very difficult company to deal with, and their procurement process took about 18 months. So it should give you confidence that, again, if our tech's good enough for them, then it's good enough for what it is that we're intending to do. IPO'd, as I mentioned, in 2014. More recently, the key things there towards the top, we bought a business called Card One Banking in August of last year. It was a very successful fundraising. Card One Banking cost 15 million. We were looking to raise 20, we ended up raising 27, could have raised a lot more as it happened. And I think what happened there was that the market can see we've delivered on what we said we're going to do consistently, and the story starts to make sense. So why did we buy that business? Well, it has, without boring you with too much detail, to be a bank here, you need what's called a deposit-taking license. You need to be able to take money, pay interest on it, and then you can relend it. There's a light version of that called an e-money license, which we have. E-money allows you to do everything a bank can do apart from that thing, i.e. take deposits and relend them. So we can't lend any money that's deposited with us, but we can do everything else. Card One has that functionality. So their system is plumbed into backs, chaps, standing orders, direct debits, you name it. So it's a bank-grade bank account without the ability to relend money, which is inherently less risky, of course, for the consumer that's depositing with you, because it's not like you can go out of business like some banks have done in the past. So we almost had a shrink-wrapped ability to offer that full banking suite by buying that business, is effectively what we did. Concurrently, we'd noticed over the last few years that the corporate version of our card product, which is like an expense platform for SMEs, and hence the tying to Loop up there, or one of them, was flying off the shelves with almost no marketing. And we got a lot of feedback from our customers that they were paying a lot to banking providers. SMEs for banks tend to be more of a cost centre. They don't make enough money out of them. So the SME sector of 5.5 million companies in the UK is underbanked. So we saw the opportunity there to offer them this full range of services, which banking is just one part. Next bubble along, MasterCard membership. Again, what is that? The cards that we issue now, if you turn them over, it says on the back, issued by Wirecard. You need an issuing bank. There's a whole supply chain that sits behind it. Now we can issue our own cards. So again, the fact we're well capitalized and can afford to do this stuff in terms of collateralization, we can cut people out of the loop. And one of the themes that we've been going on about over the last couple of years is scale. And you heard that again with Loop Up. So the bigger you get in payments, the cheaper things are. The unit cost just goes down and down and down. So if you cut out more people in our supply chain, things get cheaper, and you can move quicker because you're not having to deal with 3 compliance departments and all the various stuff that sits in between. And last but no means least, you remove points of failure, because if your system's up but theirs is down, you're down. Now, basically, you're reliant only on your own systems. So that was really, really pivotal for us to get that license, which we now have. Then we bought City4X in February of this year. So City4X is a pure scale play for us. That turns over about 600 million a year. We've moved straight onto their platform. We've gained massive economies of scale there. We can basically process all of their business and ours with the same headcount that was basically processing ours. So you can see how it all works. A combination of scale and innovation is really what we're trying to play. So over to James.
So this is where we find ourselves from a traditional FX business with an enormous number of customers over the years. We've now built out the technology and the capability that we can build product in-house directly and then cross-sell it to an existing large portfolio of businesses and consumers, and also acquire new customers as well. And through the acquisitions of Card One Banking and City4X, this will in the future allow us to develop a huge range of products, both around SMEs and consumers as well. So we've got the infrastructure, the people, the scale, and scale, as Ian mentioned and Lupa mentioned, critically important in the payments industry. The more scale you have, the cheaper it is to transact. So our margin therefore increases with every 10,000 customers, 20,000 customers. So very, very important indeed. The team has grown significantly, particularly around the product development. So quite a large bit of the business, and in fact, the office is now ram-packed, so we'll keep looking for more space, is around the product development and the technology side. And in the true sense of the word, we are now a fintech business, which is a bit of a buzzword, and many businesses say they are. But the reality is, within FairFX, the majority, aside from the sales bit of it, a lot of it is the product development and the technology side. So we have the complete package and the technology stack to build out on the roadmap.
Cool.
So a little bit on the progress side of things. Ultimately, acquiring businesses and trying to integrate them can always be, fraught with difficulty. What FairFX Group is trying to do here is create a one brand, one culture environment. And we've been so far very, very successful in that. So, for example, Card One Banking is based in Chester. Obviously, the FairFX is London-based, but we're running a total sales team out of the two sites under one sales manager based in Chester, and they're growing business significantly. So that's proved very, very successful. And over time, the two businesses are becoming closer and closer together. And in fact, we just refer now to Chester office, London office. And that's very similar to the City Forex as well. So both dealing teams are now together in one site and actually operating as one. So we don't differentiate at all between the two businesses, all the three businesses, in fact. It's now just under one group. So that's been very, very positive. All of our marketing now is done in London. A call centre was particularly important, particularly on the Chester side of the business. They were very call centre focused. London, obviously, rents are very expensive, staff is more expensive. Chester, much more cost efficient. So we've moved all of our call centre functionality and capability up to our Chester office, and it allows us to expand that out. Because ultimately, what we're offering is a service product, and we intend to have 24/7 customer service, and this will allow us to do that and service our customers in a much better fashion. A lot of the back office side of things have been rationalised as well. So payments, settlements, all of that sort of thing can come under one roof. And we've achieved cost efficiencies through that. And one of the key things actually is the cross-selling side of things. Obviously, with different products and different product lines, we can cross-sell different parts of the businesses. So, for example, the corporate expense management platform that Ian touched on that's been tremendously successful, we can now cross-sell that to other parts of the businesses that we've acquired. So a whole new route of revenue for us.
So if a foreign exchange originated business buys the ability to offer a banking product, what do you get? Well, you get this. This is the Fair Everywhere account. It was actually announced this morning. I delayed it just for this. It was formally released this morning. We did an RNS on it. For those of you that have ever looked at FairFX or tried the products, whatever, you should see this has got a different look, feel. It's more design-led. It's crisper. And basically, as I say, what you've got there is bank account in sterling, dollars and euros. You can flip it around. It does everything a full banking product will do. There are many companies out there that says they offer bank accounts now, the Monzos of this world. They don't offer the ability to walk in the post office and deposit cash. There's an economy. It's not all just new economy cashless. There's a whole range of businesses. If you run a corner shop, you need to be banked. This will cope with that all the way up to a multinational wishing to send money abroad. The initial premise of this account is a subscription model. We've got one tier to start with. We're adding more tiers, and also using the Amazon Prime / Amazon example, a zero subscription but pay-as-you-go type model. So we're very proud of it. We've been knocking out the kinks of it. If you look at the Card One business that we bought, take the retail side of it, it's very much lower end demographic, D's and E's. So the functionality wasn't what we need to support this. For instance, if you lose your PIN code for your card at the Card One suite originally, you had to wait until get a new one in the post, which is not exactly 21st century technology. So this brings these two things together and is a real manifestation for customers of what we've achieved by merging the businesses. Results, I'm not going to labour on these because they're out in the market, and Rachel's just waved the 5-minute thing at me, so I've got to get a move on. Basically, everything's pointing in the right direction. Turnover, as we describe it, is I mean, that's a massive number, isn't it, is the amount of FX volume and just money going through the pipework. So it's actually revenues more like turnover in the conventional investment sense. When you look at the turnover we'll have for this year with a combination of City Forex and the Card One business for the full year, is going to be really, really quite massive. But as you can see for 2017, everything was definitely pointing the right way. We became profitable for the first time. Growth was strong across the board, and we're very positive for what's going on for this year as well. We had some highlights there, again, I won't labour on them. First quarter, again, in the public domain already, very strong and backing up the numbers that are out there for the forecasts from Senkos, who's our nomad. So we remain strongly optimistic that we're going to hit those numbers. They were quite aggressive, but as we sit here now, we're confident and we're on track. I think the other thing to mention vis-a-vis us and some of the newer entrants in the market, I'd say it's getting more congested, particularly on the retail side, less on the SME side, is that what we do, most of the new entrants will be app only. So we have desktop, mobile responsive desktop all the way through to app, and actual people on the phones as well. And part of the USP, if you will, is to attract customers, be it through cash or card. Then as and when they need to wire 5,000 euros abroad, you can do it up through any one of those three mediums I just described. But as and when maybe they might buy a villa in Spain for 100,000 euros, they're not going to do that on their phone. They'll always, for something that significant, want to speak to a human being, and we have a team of dealers doing all of that. So we cater across all platforms, all types of technologies, all the way up to phone broked, so the sort of no-tech, if you want to think of fintech through to no-tech. And that's important. So we're kind of the Waitrose to a Lidl, if you want to think of it that way. So that's our positioning. We have our particular niche that works well for. Our demographic will tend to be slightly older than some of the newer entrants that are sort of more millennial app-based. So the size of the prize, ultimately, what can we do with this? We're still very much UK focused. In the Loop Up presentation, there is an element to which you need to stay focused, but what we have here now is very portable. What we don't need to do is open up offices and all over the world. We can do it remotely, as long as you have adequate licenses and the bare bones in each place. It boils down to a marketing success or failure then. We've got about 30,000 business customers now. 200,000 is a very sensible target. We're adding them hand over fist. We grew the corporate platform by basically inbounds in the past. Now we have a very coherent strategy both for traditional sales as well as marketing. So that's going to grow very strongly. Consumer target, we roll out in other locations. From 750,000 to 2 million, again, is not ridiculous or lofty in our opinion at all. Cross-sell is absolutely vital, as James alluded to. We have so many products and capabilities now. Just imagine how much more we can get out of the customers we already have, even if we didn't add any more. And we're seeing the benefits of that immediately each time we do an acquisition. I should say on acquisitions also, I was told when we bought Card One that the market would want us to wait a bit before we did another because they need to see that you know what you're doing. And, well, yeah, of course. But actually, there's so much truth in that. It doesn't matter whether I've been through many transactions myself in my career where business has been put together. The organisation itself needs to adapt, and people are fearful of change. So once you've done one acquisition, the next one gets easier, you get better at it. The whole company learns how it works and doesn't fear it, embraces it. So it's a very positive thing to do. And last but no means least, as I mentioned earlier, profit numbers are good now and growing, so we're well set. Thank you very much.